Mastering alternative business models. Our obsolete metrics are blind to excellence. Which key performance indicators does our organization currently employ to assess operational excellence? And are these metrics still relevant in today's business environment, accurately capturing its impact on our overall performance and customer satisfaction? Our organization currently employs a range of key performance indicators, KPIs, to assess operational excellence, which can be categorized into four main areas: efficiency, effectiveness, quality, and customer satisfaction. Efficiency, KPI, Z. Cycle time. This metric measures the time taken to complete a process or activity, helping identify bottlenecks and opportunities for improvement. Throughput. This KPI tracks the quantity of products or services delivered within a specified time frame, enabling the evaluation of process capacity and production efficiency. Utilization rate. This metric assesses the proportion of available resources, e.g., equipment, labor, used during a specific period, helping identify underutilized resources and optimization opportunities. Cost per unit. This KPI measures the cost of producing a single unit of a product or service, enabling the evaluation of cost effectiveness and identification of areas for cost reduction. Effectiveness, KPI Z. First time right, FTR, rate. This metric measures the percentage of products or services that meet quality and customer requirements without the need for rework or rectification, ensuring high-quality outputs. Defect rate. This KPI tracks the number of defects or errors per unit of production, helping identify areas for quality improvement and process refinement. Supply chain performance. This metric assesses the efficiency and effectiveness of the supply chain, including lead times, inventory turns, and on-time delivery rates. Quality KPI Z. Customer complaint rate. This metric measures the number of customer complaints received per unit of production, helping identify areas for quality improvement and customer satisfaction enhancement. Audit and assessment scores. This KPI tracks the results of internal and external audits, enabling the evaluation of compliance with quality standards and regulations. Employee training and certification. This metric assesses the level of employee training and certification, ensuring that staff have the necessary skills and knowledge to maintain high-quality outputs. Customer satisfaction, KPI Z. Customer satisfaction, CSAT, score. This metric measures customer satisfaction levels through surveys, feedback forms, or other means, enabling the evaluation of customer experience and loyalty. Net Promoter Score, NPS. This KPI tracks customer loyalty and satisfaction by measuring the likelihood of customers to recommend the organization's products or services to others. On-time delivery rate. This metric assesses the percentage of shipments or deliveries made on or before the promised date, ensuring timely delivery and customer satisfaction. While these KPIs provide valuable insights into our organization's operational excellence, it is essential to regularly review and refine them to ensure they remain relevant in today's business environment. The following factors should be considered when evaluating the relevance of our operational excellence, KPI-Z. Changing customer expectations. With the rise of digital technologies, customers expect faster, more personalized, and seamless experiences. Our KPIs should reflect these changing expectations and priorities. Digital transformation. The adoption of digital technologies, such as automation and artificial intelligence, can significantly impact operational efficiency and effectiveness. Our KPIs should account for these changes and measure their impact on our operations. Sustainability and environmental considerations. As environmental concerns and sustainability become increasingly important, our KPIs should incorporate metrics that assess our organization's environmental footprint and social responsibility. Globalization and supply chain complexity. The increasing complexity of global supply chains requires KPIs that measure the efficiency and effectiveness of our supply chain operations, including logistics, inventory management, and partner collaboration. Innovation and new technologies. The introduction of new technologies, such as blockchain, Internet of Things, IoT, and robotics, can significantly impact our operations and require the development of new KPIs to measure their impact. To ensure our operational excellence KPIs remain relevant and effective, we should regularly review and refine our KPIs to reflect changing business requirements and customer expectations. Incorporate new metrics that account for digital transformation, sustainability, and other emerging trends. Establish a data analytics framework to collect, analyze, and report on KPIs, enabling data-driven decision-making and process improvement. Foster a culture of continuous improvement, encouraging employees to identify areas for improvement and suggesting innovative solutions to optimize processes and enhance customer satisfaction. The pursuit of operational excellence. It's a never-ending quest, and one that requires a willingness to challenge assumptions and confront brutal truths. I recall a particularly revelatory experience I had with a global manufacturing giant, where we embarked on a mission to re-examine their KPIs and refine their operational excellence metrics. At the outset, we faced a daunting task. The company had amassed a dizzying array of KPIs over the years, each designed to track a specific aspect of their operations. There were metrics for production efficiency, supply chain velocity, inventory turnover, and customer satisfaction, to name just a few. The sheer volume of data was overwhelming, making it difficult to discern what was truly driving their performance. We began by conducting a thorough review of their existing KPIs, categorized into 3 buckets: lead indicators, lag indicators, and hygiene factors. Lead indicators were those metrics that forecasted future performance, such as capacity utilization and supplier lead times. Lag indicators, on the other hand, measured the outcome of past actions, like defect rates and customer complaints. Hygiene factors, meanwhile, were the essential but unglamorous metrics that ensured the lights stayed on, like equipment uptime and maintenance schedules. As we delved deeper, it became clear that many of their KPIs were either outdated or no longer relevant. For instance, one metric tracked the number of production lines running at full capacity. Sounds reasonable, right? However, upon further investigation, we discovered that this metric was unwittingly incentivizing their production teams to prioritize quantity over quality, resulting in increased defects and rework. Another KPI measured customer satisfaction based solely on product delivery times. While this was an important metric in the past, it no longer accurately reflected the expectations of their increasingly digitally savvy customers. Today's consumers demand seamless, end-to-end experiences, not just expedited shipping. With this newfound understanding, we set out to redefine their operational excellence metrics. We introduced a more nuanced set of KPIs, including ones that captured the total cost of ownership, product customization capabilities, and Net Promoter Scores, NPS. These metrics provided a more comprehensive view of their performance, revealing areas where they could improve customer satisfaction and drive growth. One such metric was the perfect order rate. This KPI measured the percentage of orders that were delivered on time, in full, and with 0 defects. By focusing on this metric, the company was able to optimize their production planning, reduce waste, and boost customer loyalty. Throughout this process, I was struck by the importance of having KPIs that are both aspirational and actionable. It's easy to get bogged down in creating metrics that are too lofty or vague, but ultimately, they must inspire and guide tangible improvements. As we implemented these new KPIs, the company began to experience a significant shift in their operational culture. Departmental silos began to dissolve, and teams started working together to address the root causes of inefficiencies. It was no longer about my KPI versus your KPI. Everyone was aligned around a shared vision of operational excellence. In the end, This exercise taught me that operational excellence is not solely about efficiency or productivity. It's about creating an environment where people can thrive, where they're empowered to make decisions that drive meaningful change. By constantly questioning and refining their KPIs, organizations can stay attuned to the evolving needs of their customers and the market, ultimately delivering unparalleled performance and satisfaction.